type of license do the insurance producers have to have? Is it just a certified license through the states as far as life insurance, or can they, tell me about the different licenses, I guess, Chuck. Sorry.
No, no worries. When you get an insurance license, there are different kinds of licenses, and they are called lines of authority.
Oh, okay.
And the most common one is the life. Some states, life and health is combined into one license. But if you basically have a life health license, you apply to the state. They do a little background check. You have to take a couple of tests, and then you are licensed to sell life insurance policies. Most of the life insurance folks really don't get into the health stuff because it tends to be a slightly more specialized thing. But if you have a plain life license, you may sell fixed annuities.
Okay.
But if in many states to do variable annuities, indexed annuities, variable life, any of those products like that, that requires an additional exam and a little more training, and it's a little, it's just a little tougher thing to do. I mean, it's not like getting a stockbroker kind of license or anything like that, but it is just a little bit tougher than the regular life license.
Okay, and so for fixed annuities, they just need to have a plain life license and all is good. Otherwise, it requires a different license and slightly additional education and licensing requirements. But really what we're dealing with, for the most part, is plain fixed annuities, and so we're covered under the plain life license.
Exactly right.
Okay, perfect. Thank you.
Okay, anything else?
I have a question, Chuck. This is Clay.
Sure.
What is an example of a fixed rate annuity?
Well, basically, if I had $10,000 that I put into an annuity, and that annuity would pay me a rate of, say, 3%. I don't really know what the going rates are right now, but we'll just use that as an example. They would pay you a rate of 3% over a fixed period of time, say 5 years, 10 years, whatever that may be, and then at the end of that 10 years, you would get your $10,000 back.
Okay. Next question on that. If it's a fixed rate, what kind of product would that go into? I know with the others that it would go to the Dow Jones, S&P, and all of that. So what kind of product would the fixed go to?
It's basically just a contract between yourself and the insurance company that they are going to pay you that rate of return over a fixed period of time.
Oh, okay. Perfect. Thank you.
No problem. And actually, these fixed annuities are a tremendous amount of money changing hands here. It's literally in the billions and billions every year that are put into these products. So, obviously there's a great deal of interest in generating these contracts, and it's really the annuities that drive this segment of the market. So then there is an important distinction, and you will see this in the scripts that you have in the industry, and that is one of the things we usually ask is, are you a captive agent? And what that means is there are two main types of insurance producers. People who work for certain carriers, most notably Allstate, State Farm, Farmers, MetLife, some of these guys, they are employees of the carrier. They draw a salary, they get benefits. They're basically an employee like the rest of us are. That's the upside. They have a nice stable salary and they get benefits and all that stuff. The downside to that is they are restricted in what they are allowed to sell due to their affiliation with their employer, basically. And you know, it's all comes down to what a person's nature is. If somebody wants a nice stable salary, and you know, and they want to have a State Farm shingle in front of their office, then you know they'll go down that route. But traditionally, they are somewhat restricted in their ability to be very responsive to market trends, and you know, they really cannot contract with an insurance marketing organization because they are already by default contracted with that carrier.
Okay.
So that is why we always ask that question, are you captive? Not that we can't sometimes lure captive people away from those companies. It's just a harder thing to do, and it usually, it's just a harder thing to do. The folks we're looking for are the independent insurance agents who are out there. And if I am not a captive agent, I can be affiliated with, or as it's called in the industry, appointed with, many multiple carriers. They can be competing carriers. It doesn't matter. If you're independent, you are basically free to sell any product from any carrier you're appointed with that fits the needs of the client that's sitting across the table from you. The upside of this is that freedom and flexibility can allow you to have a very wide portfolio of products that you're able to sell, and there is a very high income potential for extremely well-organized, aggressive producers to go out there. You know, there are many seven-figure producers in the country who basically are doing nothing but selling annuities and these kinds of things. And the downside is when you're just getting into the industry, you know, you're commission only. So if you don't sell, you don't eat. So that's why a lot of these independent folks kind of gravitate towards these marketing organizations, because they give them kind of a safety net of services and that they can rely on when they are just getting started out in the industry, because it's getting started as an insurance agent is easy from the standpoint of getting your license, but it's very competitive and it's very difficult to get an insurance practice established from the ground up. So I'll pause again there if there's any questions on this piece of it.
I'm good.
I'm good.
Okay.